Good day. This is the Elliott Wave weekly update for the S&P 500 being recorded on Sunday, August the 11th, 2024. And as usual, I'm going to begin with the cash market starting on the 3-year weekly chart, just to do a quick review of where we are and where we've come from. So on an Elliott Wave basis, the market remains involved on the highest degree that I'm counting right now within a primary fifth wave up. And that primary fifth wave began in October of 2022. Now, within that primary fifth wave, we'll have 5 waves of intermediate degree, of which intermediate 1 and 2 are complete, and we remain within intermediate wave 3. Now, within intermediate wave 3, there will be 5 waves of minor degree, of which we have minor 1, 2, and 3 complete. So we are now within a minor 4th wave corrective phase within this intermediate wave 3 going up. So again, within the minor degree, we finished minor wave 3 out of 5, and now we're within minor wave 4. Still to come then would be a minor 5th wave up, 2 new all-time highs. That would finish intermediate wave 3. Then we have an intermediate 4th wave decline, and with an additional intermediate 5th wave higher, again to new all-time highs, and that then would complete the primary 5th wave up, and one above the cycle degree 3rd wave. Now, that's still quite a bit of time out in front of us before all of this is complete. Excuse me. So let's kind of dive in now to take a look at what's going on a more daily basis, and then on down to look at actually inside this correction that we have been counting. So coming off of the weekly, I'm going to drop down to the daily picture, and we can see that, again, we're within the minor 4th wave. Now, just to begin there, where would we expect a minor 4th wave to kind of come into on an Elliott wave basis? Well, Elliott did leave us instructions and left us with some pretty good clues that a 4th wave will come into the price territory and likely to the terminus of the 4th wave of one lesser degree. Well, one lesser degree from minor is the minute, labeled here in the white color. And then I have put a box around that 4th wave, the minute 4th wave. So I'm showing where I would expect the minor 4th wave to come into and likely find its endpoint towards the low of that minute 4th wave, which happens to be 49.53 basis the cash market. Now, we did get down into the box, and it did come down in an ABC, and I thought, okay, outside chance, that's all you get. And now we pick it up again, and we start to rally. Well, that rally did not really, I mean, it's happening, but remember that I said if we come down that fast, what I'd be looking for to launch off of that would be more like a V-shaped bottom. So in other words, it forms a big V, and we don't get this type of move, but we get a huge lift off from that low. Excuse me. Now, in lieu of that not happening, I've gone back and realized that, not realized, but I offered out that the time factor itself really did not line up that this 4th wave of minor degree would take a matter of days to finish versus the whole time factor suggesting it should be at least a month or more. Now, what we do when we look at that, let me just go back out, we start to look at the minor wave 2 as compared to the minor wave 4. So we get a little time factor going in there, and then we also could compare it even to this wave 2. And then we see that we're out. We need to move out to inside maybe late August into September before this 4th wave would be complete. All right, so that we go with that, and we say, okay, so now I'm going to bring it down to the hourly chart, because now we want to take a look at the inside of this wave. So there's the top, the wave, wave 5, and all the way up to the minor 3. And then we start to work our way down. Now, first thing you're going to notice is like, you changed the color. So I changed the degree. I had spoken in one of the daily updates that I may consider just dropping the degree, 1 degree. So this initially I put in the minuet degree, 1, 2, 3, 4, 5, to finish minute wave A, minute wave B, minute wave C. And then technically you could have stuck a minor, or you could have stuck that minor degree 4 right there. But it didn't pan out to show that that really was the case. So I also discussed how you could have an ABC of minute degree, then an ABC of and forming an X wave of minute degree, and then another ABC. But let's try this one. So, and then the other alternate to fill in all of that movement would be that I dropped it all a degree. So what we got is a minuet ABC down to form minute wave A. And now what we're doing is a minuet ABC up to form minute wave B. And that seems to fit, cleans up a lot of the internal conflict that the market may present itself, and cleans it up in terms of where we are expecting levels to come and where I can build to show what a C wave may look like. Now, let's start taking a look in here. Cash market, wave A complete. We're looking for an ABC up, and immediately we're confronted with this. Because what really, this does count as 5 when I take a look at it internally. But if I'm looking for an A, B, and now we're in a C wave, what does that need to do? Well, we had A, B, C, wave B. So we're looking again for minuet, minuet A, B, C, minuet B. We're in that minuet C wave, which will form 5 waves in and of itself. So how are we doing coming into there? If I'm going to follow accordingly to what I believe the futures market is also telling us, then I think we're at 1 of C. And we have maybe a 2 of C. And then we come back up in a 3, a 4, and a 5. So here we have ABC, A, ABC, B, and now we're counting 5. So it could be, this gets a little sticky down right in there, but we got to give the benefit of the doubt, and we're going to be looking for a move likely up into this area, 54.60, to finish that C wave. Now, what does that kind of spell out in terms of, if you've been listening to my dailies, I've been giving a lot of information about the importance of the 5,000 level here in the S&P. And that 5,000 level remains extremely important. Now, over in the futures market, there is a support, a fib support level right at 5,002. And in the futures market, it's coming in at about 49.58. And with the 50% marker down here at 47.40. Now, the deal is that on a very long, on a big picture view, 5,000 should present and hold as strong support. If that level were to break, it would, in my view, unleash a lot of selling because of the nature of what's holding it up as support. So when you're looking at an option data, you're looking at option flows, what sits there as well are gamma levels. Now that would suggest that probably what's there are short puts, and that's to support. If it breaks that support, all of those puts begin to work against. And since I'm feeling that there are large positions, that if it breaks and like goes right through substantially, then a lot of adjusting is going to be had, and we're likely going to slide quickly. Now, what could do that? A number of things, but how would that then fit in? So I'm going to come back. Let me just move this back out. Again, I think I could do it on the daily. So we got that bottom, right? So basically here in the cash market, 5,000 is still important, but we have this support down at 49.58, which takes us to the bottom of that wave 4. So in the cash market, I'm like, that really does fit for it to break below 5,000. And the damage of doing that could really shave off a lot more and get us right to that level. Now let's just kind of take a look and see, bring it back down. Let me go back down to the 4 hour, a little bit easier to kind of work with. So we're going to open this up. And now I'm, again, just using what I call guesstimates, right? Because I have no foresight to say that, oh, it's going to stop here or it's going to stop here. But we're going to go on the basis that if this is only, here we have A, B, and we're in a C wave, and maybe 1, 2, 3, 4, 5, 1, we're going to come down to a 2. We got a 3 and a 4 and a 5 to do that. We have here, we have here, and we have here. Let's go, because of where I think we are within the C wave, that we have a very strong chance of pushing up through 5,400, up towards this zone up in here. Now, if I put it here, let's take a look. 618 for a C wave, right? 5120, not the most common. Most common is 100%. 4910. That definitely goes through that 5,000 level, which should find some pretty strong support there. And if it were to really get smashed, where could the market go? 4,900? Very likely. But yet we're not really pressing on that 50% yet. So we have 100% of 4910. We have 1.618 at 45. Do I really think that deep? No. I think if we start getting down here, we run in then the danger of where my minor wave 1 is, down here. So we're not endangering the whole move. But if we're going to come down to here, to the 200 moving average on the weekly chart, it really does start to go like, well, wait a minute. The size of the 4 against the size of the 2 doesn't really match anymore. 49.10, yeah, I like that window. 47.40, still I'm okay. We start coming down deeper, and I start to wonder, what is really this? Am I off by some? Is this a degree higher? Could it be the intermediate third wave? Now you see my thought. I start to move out to think, what could it be? It's still corrective, still requiring additional strong upside before the larger rally phase in form of a primary fifth wave would be complete. But we just need to deal with the severity and the possibility of that severity presenting itself. And also keep it within the time window that fits for a minor fourth wave in terms of the length of time that it should take for this to complete. Which is why I believe we're in that B wave, and we still have the B and then the C wave to do. So possibilities. I do think that 5,000 will get broken. So that's going to throw a shift into the marketplace simply on a options flow, money flow, gamma flow basis. But I'm going to stick to the Elliott right now and just go with that. I have this right here. Now that would be, now let's not, please don't misunderstand me, because exactly what I'm saying is that that's if it reaches the 618 level, where the B wave comes all the way up to here. If the B wave keeps going higher, which it can, not necessarily looking for it to go too much higher than 62%, but it can. And that would just pull up, if it got all the way up to here, say, for example, then of course our numbers change and it pulls it back up closer to 5,000. Just for example, And again, I am not saying that this is going to be the case. Let's say it got up to this next level. Where are we? 100% is above 5,000. So it depends, right? If it only makes it to here, 5,000 is going to be broken. So when I start to talk about, well, I think that the potential gets stronger, that 5,000 will be penetrated. It'll be recovered, but it may be penetrated, causing a little rift in the market when that occurs. And it could happen close to the August expiration. So you see how these things will start to go walking hand in hand. Have nothing to do, when we got economic numbers coming out next week. We have CPI, PPI, so it could happen even before Friday, to be honest with you. Depending on how and what these numbers are and how they will have on what effect they're going to have on the market. So all of that's unknown, but I can give you guesstimates on, well, if we get up to here and we drop down, 5,000 may be safe. If we don't, and we only make it up to an expected 62%, 5,000 is likely to be broken. And the problem would rise if we, oops, I didn't mean to do that one. If we don't even get up to 62%, if let's say we only got to 50%, you're pretty much guaranteed that 5,000 will be taken out and then some. So again, not breaking down to that 50% level, because just below that, we start running into, some other danger signs. But begin to see how this picture starts to come together. This rally, though, right now, so I'm going to take this off because it isn't ready yet. We don't have that upper level. And I'm thinking that if this is just wave one, we do have a chance of getting all the way up to 55, 55.50. Now, could really rock the boat. We got big gap. We got another gap. We got gaps all over the place here in the S&P and the cash market, simply because the future continues to trade without it. So let's see how this all unfolds. Right now, moving average-wise, that 200 pretty flat, and the 50 going pretty flat. They're going to provide resistance. So just above where we are, we have resistance. Get out of the way. At 53.77. And that is the 200 period, 4-hour, 200 period moving average. And right above it, then we have the fibs at 53.94.95. And then just above that at 54.13, we have the 4-hour 50 period moving average. So both of those are going to, we have resistance basically beginning 53.77 to 53.95 to 54.13 to 54.60. We have resistance pegged all the way up, and the market may just bounce and have trouble with each one of those levels. So, but again, I am looking for a continuation of the B wave, and here are our markers to complete the B wave. So let's go over and take a look. Oh, and by the way, on the RSI, still building. Not showing signs of topping either way. So we got room. Let's go over and take a look at the ES. ES again. even if I just pull it out to that three-year weekly chart, here we are. Not looking so bad. We're still in the primary fifth. We're still in the intermediate third. And we have 1, 2, 3 minor degrees done. And we're in minor 4. Same deal. Here we are coming in to that window, that box of the previous fourth. And somehow it's because of the contract rules that this box changes. Okay, so let's start bringing it down. Let's bring it to the daily. The daily, you see, it's a little bit cleaner in terms of it fits 1, 2, 3, 4, 5, A, B, C, B, 1, 2, 3, 4, 5, C, minute wave A. And then this shows that wonderful day where we had, this was basically could be considered a bearish engulfing because it certainly engulfed that whole bar. And then the next day, complete with almost a new low, but definitively engulfed the high, an engulfing bullish bar, followed by another smaller, but still more bullish bar. So the follow through was there. Now we're going to continue to get that follow through? I think so. So what do we got coming up? Well, our 100%, where wave C, the minuet wave C, would be equal to minuet wave A, comes in at 54.16. So you can say 54.15, 54.20. What we got above it? Well, we got the 20 moving average sitting at 54.33, but you see starting to go a little bit flat. We have the 50 sitting at 54.52, also going flat. Both are likely to prevent us with some resistance. And it could be enough to finish maybe a third, come down to 4, and we can start heading back up again. Now, here, you see 5,002. I pulled these over so that they don't get mixed up with any downside I put up. But these are for minor wave 4. We have 382, which is the most common retracement level for a fourth wave, at 5,002. Now, the breakpoint equivalent in the futures market to that 5,000 level in the SPX is 5,027. Now, that gets a little bit less because it's all premium in the future versus the cash. And as we get closer to September expiration, premium drops off of that futures market. But right now, it's still about $27. So with that in mind, let's do that same exercise. Let's go and take a look. If I'm going to put in fibs for a C wave. Now, let's go up to 54.15, which I think will be exceeded. So I'm going to just start from here. We'll start with the 55.63 resistance 1.618, close also to 5,600, which is where the minuet B wave ended as a part of wave A. So what do we got going on here? Well, 100% down is 49.62. 5,000 cleanly gets broken. Let's see what happens if I drop this and I bring it all the way down to here. 5,000 gets broken. So what is it really telling me? This stronghold at 5,000 or 5,027 in the futures market has a high probability of being broken during this C wave. Now, it's what's going to happen after. Because I think if it gets broken, it's getting broken on the way to putting in the low of minor wave 4. Even if I have to up this degree again, remember we had the conversation about, is it a bigger fourth wave? Is it an intermediate fourth wave? I don't think so yet, but I'm not discounting and throwing away that thought. What if it is an intermediate fourth wave? Well, then coming down to 48.18 or even lower would be more fitting. Keep all of this open as the market goes through these gyrations. More important, it's that the fibs and the position of the market are being more indicative that the next leg down will break that stronghold at 5,000. That's kind of my point. Now, we may see some shifting in terms of positioning, where instead of that's going to hold as support, they're starting to layer in underneath it with puts, not short puts, long puts. They start putting the tails on, so to speak. We'll see. I don't know. Now, so in the futures market, though, I'm getting indications at either level, 5,000 should be broken, which suggests then 5,027 will go. And the force of it, along with the force of it breaking at 5,000 in the cash, may drive this thing down to 49 or 4,800. And let me pull it back open. Look what it does. That low in the futures market is 5,027. So the low that it really shouldn't break is the same low at that 5,000 level. Now, we're getting indications that the force of it, simply because how high it goes and then where the fibs would indicate, would suggest that it goes. If by chance they still come down and they respect or hold that level, well, then that level holds. It's my other point is it is going to get very, very interesting, because that gathering of support is not necessarily indicative of the true feeling that the market has. It's just the way the market's been trading and what got built there. So it's a numbers game. It's not like, well, we think if all of the economy and everything else tells us it shouldn't drop below this level. I think it's just the way that the gamma gets built and that options flow goes to, the money flow goes to, and less to do with anything outside of that. But now we're trying to round things up, and we're realizing it's the low of the futures market. That 5,027, the equivalent for 5,000 in the SPX. Starts to get interesting when you start to look at it going like, okay, so that's what they're building for. A break will shove this thing right lower. We've seen these things before. And I have to be honest with you, if it should come overnight, like we've seen, like on a weekend and a Sunday, the market gaps below a put wall, a call wall, a gamma accumulation. It doesn't, yeah, it shows that Monday could be pretty nasty. So again, we're not there, but just revealing these levels as we start to move through this. Let me just drop down to here so we can get a little bit of an inside look to what we got. 1, 2, 3, 4, 5, A, B, C, same as that I showed in the NASDAQ. So we might have start with a little bit of a pullback. Now let's just kind of take a peek. I like, okay, if we're just in a small wave 2 and it ends up being irregular at that, well, where can we come? Well, let me go here to here to here, 5,300. We have, okay, so let me kind of clean this up a little bit so I can take, let's go in and take a look. I don't need that one. That one I would suspect it's taken out. That one's the interesting one. And along with this one, I would definitely not be looking for that. They're going to be in this color because they're minuet. So we just really have two basic, and that would be down here. So if this is A, B, and then we got a C, well, 100% is 5332. That one, if it does, it's going to end up in a little bit of a failure. More likely, down here, well, at least to that low, which is 5320, but more likely maybe 5300. It just shows a 65-point drop. They could do that real quick. We've watched this market now, folks. You know that this market can move 65, flip and turn and end up on the day. So could be something that just kind of jumps in, rattles the cages. This one I think I can take off, rattles the cages, and then comes down and launches again. If this is correct, then what we're looking for and is for the market to, that's an A, irregular B, come down 1.618 is the normal for the C wave of an irregular. And that's 5,300. We also have the hourly 50 moving average at 5322. Pretty much right towards that low. We come down, hit that, go, and then rally. Very possible. All of this is possible. So if we start lower, that's just going to put in a nice wave 2. And then we launch into 3. So I'm not looking for something. I may start down. I'm not looking for it to stay down. I'd be expecting the rally to pick up again and finish the C wave. Then, as a group, as a market, we turn and head lower. And I really do think it's going to be, again, markets can just turn and fall under their own weight, of course, but something's got to give it a little bit of a kick. And that little bit of a kick might be CPI, PPI. That's what we got coming next week. CPI and PPI on Tuesday, Wednesday. We also have a whole host of things coming out on Thursday. So we have 3 days of economic data of various levels. CPI, PPI most important because, again, everybody's then go, well, Fed's going to focus on that. So we're going to see how those inflation figures compare. Now, remember, if they love CPI and PPI, get out of the pool. They're going to run this. And why? Because algorithms are programmed that the Fed's going to cut rates. And the narrative right now is, oh, if the Fed really wants to save the market from slaughtering itself, they better cut the rate because we all know that lower interest rates propels markets higher. I just want to throw out a disclaimer. Not always. Consider why they cut the rate. And if they cut it and everything starts to fly and everybody's jumping on money, that's inflationary. So we have to go through this period of deflation, whether we like it or whether we don't. Inflation is usually followed by deflation. We're already witnessing that in the price of our stocks. We're seeing deflation kind of come in. We're seeing how these adjustments in the prices are taking place. Now, you can tag on to anything you want, but overvaluation is overvaluation. Too much, too soon, too quick gets corrected. So again, sometimes those corrections are overdone. But right now, we see stocks like, well, NVIDIA, Apple, AMAT, AMD, Amazon, Google. They start to kind of get adjusted. Doesn't mean that they're bad. Doesn't mean that the companies are poor. Doesn't mean that the companies are in trouble. Just means that too many people piled in and paid too much. So, and again, all kinds of things produce rallies and continued rallies. We've got tremendous option flows. We've got tremendous products out there that attract a lot of money and produce market moves. So again, I don't know what kind of weight, so I just trade it the way the market wants to go. That's kind of my thought. I'm not going to go against anything that the market is attempting or is going to go first. So in other words, it's like I trade what's in front of me. Now, when you're trying to trade ahead of the market by trying to second or determine whether it's going to go here or it's going to go lower, and here's why, then I think that's when you kind of run into trouble. It's nothing wrong having positions, folks. But I think that's like when you're trading like that, then you trade smart in terms of you may think that this is where it's going to go, but what's your stop or what's your protection? What if it doesn't? What type of a position are you building? What's your exposure, et cetera? Lots of things, different discussion. Sticking with this, I do think that's like we may start with a little bit lower, and then I think we pick up the rally again. I believe that the market will go above 5,400 and closer than back towards 5,500 before all is said and done. And this minute B wave is complete, setting the stage for the minute C wave of minor 4. Moving averages, let me just start with the daily. Moving averages are really, look at that. All flat, flat, flat. The 200 period is flat at 52.17. Even the 13 is flat at 53.52. The 20, angling lower, but starting to flatten out at 54.33. And then the 50 flat at 54.51. If we first open down, these two will likely angle lower. If we rally strongly, I think the 200 remains flat. The 50 is likely going to flatten out right there, which is going to start to be indicative of where the market may not be able to get above. Just saying. So moving averages right now, not much of a help other than sideways. Again, not necessarily looking for that, but that's what we got here accordingly. And RSI, very neutral. Plenty of room to the upside. All right, that's going to complete and get this done and get this posted. The next Elliott Wave Daily will be on Monday, August the 12th.